This will be the first chart day we've ever offered publicly on YouTube. I might regret it, but I wanted to give you a glimpse of what we do every single Wednesday in the private community. And if you're interested, definitely check our community out. Welcome to another edition of Chart Day. I'm your host, Eric, Mr. Fired Up Wealth. If you've been here with us for a little bit, if you've been following our strategy at all, if you've been following the Fired Up Wealth methodology, even a little bit, if you've made any effort at all, you've been printing money in 2023 and 2024. Now, if you've been listening, if you've been paying attention, we tell you that there are these things called spec stocks, and they can be 10x or they can be zero. And we can give you a lot of examples of both. But we're going to talk here in a second about Rocket Lab as an example where you can make a lot of money in these stocks in a very short amount of time, but you can also lose a lot of money, 10x or zero. The idea behind spec, I say it over and over, is that you have a small percentage of your portfolio, max 10%. But if you have spec, you have to have a lot of stocks in that bucket. You cannot just have 2 or 3 spec stocks because it doesn't work. If Peter Lynch is wrong 40% of the time and happy with that, you should probably be happy with something like being right, maybe only 25% on spec. But here's the thing. If you get one that rips and gives you a 10, 20x, it's going to take care of any mistakes you made in that bucket. And hopefully you're right. Maybe you're right half the time. And then your batting odds are a lot better. Your batting percentage is a lot better. But people will go out and buy a couple of these stocks and call it their portfolio. First of all, the majority of your portfolio should be high quality. You should build a core of ETFs, dividend stocks, and high quality growth stocks, not just speculative type growth stocks. But today we're going to do chart day. We're going to cover QQQ and 20 individual stock tickers. We've been doing this since we started the community back in July of 2020. YouTube channel was started in 2019. And I started the channel really just to try to help friends and family who always ask me questions. They knew I was a nerd and I studied the market all the time. Which stock should I buy now? Which stock should I buy now? Hey, I'm just going to make a video on YouTube and maybe someday I'll make $100 a month and it'll pay my cell phone bill. Nice little hobby, right? Well, it became something else. You know the story. I quit my very good software job, 150K base plus commission job to do this full time. And now here we are on a Wednesday morning and we're going to talk about stocks. I'm going to give you some thoughts, some ideas, some opinions. All this is just opinions. I cannot give you financial advice or legal advice. So make your own decisions with your money. Do your own homework. All right. Okay. So here's what we're going to do today. First of all, let me talk about CPI. CPI came in meeting expectations, 2.6%. You can see this chart here. 2021, 1.4%, rocketed all the way up June 2022 to 9%, back to 2.6. But of course, the Fed wants 2%. And this easing cycle isn't, it's just kind of getting started. But if inflation creeps up, you could have a mess with the market because we have a lot of frothiness, especially in certain names. Now, if you look at the Trump trade from 2017, it was a great year. But then in 2018, by the end of 2018, a lot of the prices were back to what they were at the beginning of 2017. Now, if you zoom out, higher quality names, well, they're even higher, of course, than they were in 2017 or 2018. It didn't matter if you had that long-term mindset. But psychology makes it very hard for us to be like, oh, well, this ripped, 100% and it's going to drop 40% to consolidate, but I'm just going to hold it through that whole mess. And then, for 3 years, it'll be up 200% kind of a thing. That's the reality if you pick the right stocks. Here's the thing, though. Spec stocks, there's no guarantee. If it's a short squeeze or something like that, there's no guarantee that that stock can't. Look at some of these stocks like Upstart that went to $300, came to 20, now it's back to 80. But to even get back to $300, I mean, that might not ever happen at all. You know what I'm saying? So you got to be smart with your money. I think a lot of people, they assume that all stocks are created equal. Like we're not talking, if you're talking about Microsoft and Amazon, it's a different conversation than Rocket Lab, Indie, Navitas, these speculative type names that can 10x a year. If you get a big pop like an Indie, I told you in the Eric's watch list, hey, anybody that has second thoughts on India doesn't like this, You should be, if you were buying correctly, you should be in the green when it was over $5, right? And you could go ahead and sell it for a small profit or par or maybe a small loss, but cut your losses and move on. And if you look at the stock, it pops up, and then of course, now it pulls back, and it went from 550 to 475. I mean, these kind of stocks, thanks Dave for letting me know, they're going to have volatility. Let's look at this really quick. So here's Rocket Lab. In the past month, it's up 48% and another 25% in the pre-market. Now we own this in both portfolios. We had talked about it when it was $5. Like, well, if it comes down to in the fours, we'll nibble it. Cost basis on this in the main portfolio, cost basis is $3.83 a share. Community portfolio, $3.77 a share. So we have this for under $4 a share, and now it's sitting at 18. Okay. So you're talking about a 4 or 5x in basically a month on this stock. Well, not in a month, but in less than a year, a year and a half. Let's look at this real quick. So yeah, I mean, right here. So in 2024, this was under $3 in April of this year. So less than a year, the stock has gone from 373 here on this chart up to 1832. This is a spec stock, right? So now we're back to these 2021 levels. Welcome back 2021. Elon Musk tweeting about Dogecoin. Meme stocks on fire. I told you recently on a live stream, meme stocks are back. There's just new names. Rocket Lab is going to be one of those. So is Palantir. So is Tesla. SOFI. Those are the hot new retail kind of meme stocks. When we talk about meme stock, oh, that's an offensive name. It's not the same as AMC or GameStop. I get that. Again, all stocks aren't created equal. Growth stocks, well, that's a pretty wide term, right? A meme stock has 5 characteristics, and everything you read, it's all opinion, right? This is a made-up term. It's new from the pandemic era. The stock price is influenced heavily by social media. Can you say that's true for Tesla? Can you say it's true even for Nvidia, SoFi, Palantir, Rocket Lab? Absolutely. Has high volatile stock prices. Yeah, absolutely. Can rip up 20% a day, can drop 20% a day, or even more. Has trading volumes that fluctuate quickly. Absolutely. Trading boards can pump these kind of names, especially when they're small caps with low floats. They can be manipulated easily by hedge funds, by trading groups, and so on. Has substantial interest from individual investors. That's us, retail. Think about this for a second. You go on YouTube, the only stocks that get views, best stocks to buy now, Tesla stock, SoFi stock, Nvidia stock. Those are the names. I'm going to make a Rocket Lab video probably today. We'll just get a ton of views just because it has Rocket Lab in the title. That's how it works. That's how YouTube works. So think about that for a second. It doesn't mean they're not good businesses. They can't make you a lot of money over time, but understand they're going to have huge volatility both directions, right? So right now, everything's hot and things are going to go higher than you think they will on the upside. When that light switch turns the other direction, it's going to get messy. When's that going to happen? When I get that crystal ball back from the shop, I will let you know, but I don't have it with me right now. But it has substantial interest from individual investors and has prices that are disconnected from the company's business fundamentals. This is the greatest definition of what a meme stock is of all time. This is a great definition from Forbes. That's all it is. Forget about the AMC and GameStop. Just read these 5 characteristics. Does the stock meet most of these, 3 or 4? Most of the stocks that we just talked about meet all 5 of these characteristics. All right. So spec stocks and meme stocks a lot of times go hand in hand. And what a name that's hot today might not be hot tomorrow. There are certain, even like a Navitas or something indie, those were hot kind of meme stocks. Now they're like, screw those companies. They're trash. It's all about momentum, guys. Momentum's going to take things higher than you think they will on the upside and lower on the downside. If you look at something like Palantir stock in the last month, 37% in the past month, it's $62 a share. $62 a share. This is pushing like 50x EV/NTM revenue. Where crowds, it's 3 times, going on 4 times the premium of CrowdStrike. Over the past 6 months, Palantir is up 185% plus another 3%. In the past year, up 200% and another 3%. Now these are fired up well favorites, but they're still technically meme stocks. So SoFi chart. This is always I don't know. I don't know why SoFi, SoFi stock chart price. Some of these, oh my goodness. Well, you get the drift. Palantir, SoFi, Rocket Lab. But then let's look at, like, for example, let's look at Indy. So this thing just ripped up. It's up 31% past month. This got up to $5.48. And of course, I saw some at like 517. It goes a little higher because who knows? Like trying to time the tops or bottoms. Good luck with that. And then it pulls back to 475. You knew that it was going to pull back. It could go to 6 first. It's eventually going to consolidate it. It's going to happen. But at the same time, it depends on when you buy the damn stock, right? Because if you bought it back here in 2019 and didn't DCA, you're still down 50%. And if you are, that's okay because it's a spec stock. It literally can go bankrupt. If you're loading your portfolio with these stocks, you're doing it wrong. I'm going to say this. I hope I don't offend anybody, right? I'm here to help you, right? If you aren't sitting at all-time highs in your portfolio right now, you're probably doing something wrong. I'm not saying you have to follow everything that we do here, build the methodology exactly the way we do. We just did a DD challenge in the Blueprint channel, gave all kinds of different perspectives from lots of different people of what an 8 out of 10 risk is. It's this to show you that, hey, it's in the eye of the beholder, right? It's very subjective. But if you're not sitting at all-time highs right now and you're trying to invest in growth and trying to somewhat follow the fired up wealth methodology, you built your portfolio wrong. You probably have too much spec, right? Or you don't have enough stocks. There's something wrong, right? If you need help with that, trying to figure out what's wrong, post in the Blueprint channel in Discord and say, hey, here's what's going on. Now, I want to make this very clear. Fired Up Wealth has never been here to promote, like, we guarantee you're going to outperform the market by 10x and we're going to turn a $5 account to 5 million. We don't promote that. We don't really talk about those kind of numbers. Our job, we're going to do our best to outperform the market consistently. You're going to have good years and bad years. If you come in here and your expectation is like you're going to get a set return just by showing up in Discord for 10 minutes a day, you're wrong. We're not a stock picking service, and I'm not guaranteeing anything. I'm here to help you make better decisions and be a better investor with your money, to manage your own money. And if you take it seriously and you do it the correct way, you should be printing money in 2023 and 2024. And if you're not, you have to look seriously and say, what am I doing wrong? Now, I always say, have a plan and stick to it. And I absolutely believe in that. But maybe you did create a plan, but you didn't know what the hell you were doing when you created the plan. Maybe the plan isn't actually correct, right? Just think about that. Food for thought. If you're watching this and you have not watched the masterclass videos, I say this time and time again, it's going to completely change your perspective as an individual investor, and it's going to help you in so many ways, and you're going to be so much further ahead down the road. So if you're an elite, for example, and you're paying $50 for $10 to not be in that tier, and there's limited seats, it's a huge disservice. If I wanted to gouge you, I'd go charge you $3,000 or $5,000 up front for the series. It don't. It's $10 extra a month. And here's the thing. I'm making another video right now. I've already started it. It's going to be really good. Next year, we're going to make more. We're going to do some breakout sessions. Got some ideas. You want to be in that tier if you're trying to be serious with your money. If you're trying to be a better investor, you want to be where I'm at and hopefully 5 times larger than where I'm at right now at 45. You have to be in that tier if you're trying to be serious, right? Seriously, guys, like, be in the masterclass tier, because I don't want to hear it next year and you say, oh, well, it's full and I was going to wait. I'm not adding any more seats. I'm to the point right now, guys, where I'm like, hey, what do I owe anybody on YouTube? If you're watching this right now, I appreciate your support and you allow me to do this, and I love doing it. But YouTube and X and social media, it takes from me, and it just keeps taking. And I don't get anything in return, and I'm not talking about money, people just the expectations that people have, the entitlement that people have. Why don't you make an update video on this? Because I don't want to. I, I don't I don't owe you an update video on anything. If I want to make the video, I'm going to make it. Now, if it's different, if you're in the community and say, "Hey, I'd really like your thoughts on this," absolutely. Yeah, that's why we're here. I'm a team player. I'm captain of the team. I want to help you be a better investor, right? But I'm to the point with YouTube. Like, I know and I tell myself every time I come on the camera, like, be positive. And I try to be positive, right? But I also want to be real with you guys. Like, I don't have a lot of motivation to go make YouTube videos right now. We're crushing it. Anybody paying attention knows that we're crushing it. And it's not about like, oh, look at us, we guarantee this return. No, but we've had winner after winner after winner after winner. And yeah, there's going to be a couple spec stocks that don't pan out. It's part of the equation. No big deal. You sell those off, harvest them. No, nothing. My portfolio is hitting all-time highs, even though I have some of those names that haven't done well, like the Navitos's. Hell, Snowflake is one of my top positions, and it hasn't stopped the portfolio. Why? Because it's constructed to work even when you're wrong. That's part of the equation. That's the whole point of the methodology and why you have that diversification and lots of different stocks and different buckets. If it didn't make sense before, hopefully it starts to make sense and connect dots as you see these huge numbers from some of these names, go higher and higher. And we're talking about, high quality names that are going higher and higher from, the crowd strikes and the Nvidias, the Amazons, the Microsofts. Those are crushing it too. Yeah, there's a few losers in there that sometimes you're wrong. Have I ever told you that I'm always right? No. I mean, that's the beautiful thing about investing and doing it the proper way is you don't have to be right every time. If you're building the blueprint correctly, it doesn't matter. It doesn't matter. You're still going to make money, you're going to outperform, right? You're going to beat the market, which is the S&P 500, and it's going to expedite and fast track you to financial freedom and early retirement. It's as simple as that. The QQQ, orange previous chart day, yellow today's chart day. Right now, we're above the Bollinger Band. It's running hot, leans bullish with 501 support. Could literally break down and sell off. The 50-day moving average, guys, is 485. If it sold down to 475 tomorrow, I wouldn't blink once. Anytime. This, I'm telling you, the R3 is 522. This thing could go to 550, or it could go to 450, and it wouldn't surprise me the direction. Right now, the market is running hot and it leans bullish. There's a lot of euphoria, enthusiasm, a lot of retail investors. Oh my God, I'm going to get rich. Buy this, buy Dogecoin, buy whatever, meme stocks. Hey, keep buying, and I'm going to keep trimming. I'm just stacking cash. I hope it goes higher and higher and higher. I still own shares. I posted yesterday, so Rocket Lab, I did cancel my trim. I had a trim order. I told you 1777 is possible. Well, it's above that now. I think I'm going to eye for 20. Now, one of the huge disadvantages I have is that I'm live with you guys when the market opens, and I can't really watch it. So I have an order in, I think, at like 22. And the thing is it might fizzle out at 19, or it could go to 25. You say, well, why do you trim it there? Well, I mean, let's just look at it, right? You want to throw a dart? Hey, throw a dart. Tell me. Here's the pre-market up here. Hey, we're up here, guys. Woo! It was just down here at 347. But the greed is like, oh, well, this thing's going to, oh my God, it's the future. It's going to be a $5,000 stock someday. Well, maybe. And it might make you really rich, But hey, if I told you bought it at 350 and you could sell it, 6 months or 12 months later at 18 or 20 bucks, most people would say, hell yeah, sign me up for that deal. This is a parabolic move. No idea where it's going to stop. I mean, look at this move, guys. Boom. Not the top here. Up here where this orange line is. Way up here. 1831. I mean, hell, stratosphere. I mean, literally Rocket Lab is going into the stratosphere. Hell, let's just keep going higher and higher. Way up here, this is 27. Maybe it goes there. I have an order in, I think, at 22 because I have no idea. It literally could fizzle out at open at 18. It could go to 20. 20 is going to be a resistance area more than likely. But the way things are going, I mean, shit, Palantir, you get to 50 and you're thinking, oh, okay, well, this has got to fizzle out soon. Gets to 55 and now it's at 60. And this morning it was up again to like $62. My next trim's 65. Maybe it gets there, maybe it doesn't. If you think anybody can guess where the top of this is going to be, you're very mistaken. I mean, you can look at this and say, okay, well, it would make sense to get to this 2134 and have huge resistance here, but it doesn't have to happen, right? And it could blast past that too. You should be happy if you have these type of returns, and you shouldn't be too stressed if you decide to trim a few shares. Here's the thing. If you have 1,000 shares and you sell 200 or 100 or whatever you decide to sell, now you're going to have your cash back. Say you sell 200, you get your cash back, your initial investment, plus some profits. And if it goes higher, you win. You still have 800 shares long. If it goes lower, well, hey, at least I trimmed someone who was way up there. I feel pretty good about it. And what scenario is that bad? Unless you say, oh man, I'm so stupid. I sold it at $18.37 and I went to 25. My life is over because those 100 shares would have really made the difference in my life. If that's what you believe, well, then you're going to have a harder time. But you have to look at this like the whole idea is to make money. It's not about being right. Once you can tell yourself the whole goal of investing is to make money, not to be right every time. I'm going to be perfectly time the sniper time the bottom. People used to come in, they were new, and they would post stuff in the trading floor like, I bought this stock at exactly the low of the day to the penny. And they're full of shit, absolutely full of shit. Now it happens occasionally you get lucky, right? But there's no way when a stock is just falling off a cliff, if people think that they can just exactly sniper time that bottom by a cent, there's no freaking way. And there are certain people that were in here that were posting it constantly. Like every single buy was a sniper buy, and be like, reach out to them like, hey man, you're really good. Can you share some of your process? And you knew right away they were full of it, and you kind of call them out on it. Like, hey, just post what you actually paid for the stock. Like you're not impressing anybody. All it does is make you look suspicious. Anybody who's been doing this 20 years knows that you can't just sniper time the bottom. And if you really are that good, then go ahead and show me, post the actual snapshot of the buys and sells like I do in my portfolios. I show you the actual buy orders. I can't make it up. That's what it is. And if it's a good buy, it's a great buy. If it's a bad sell, it's a bad sell. The information's there and it's fact and it's validated. It's there, right? I'm showing you exactly what I'm buying and selling. It's not gonna be perfect, but you're not going to be able to time these tops and bottoms perfectly. So in 2022 is about trying to sniper time the bottom and looking like a hero. Now it's going to be about sniper timing the top. Oh my God, I sold it exactly at $19.72 and the top was 1972 and it rolled to 15. Good luck with that. So just don't be that guy or gal. Just don't. I see right through it. Just don't do it, right? This community is about honesty, integrity, right? So be better if anybody is doing that. I don't think anybody watching this right now is doing it now. I'm talking about 2022, people that aren't here anymore. The community right now is by far the best it's been in terms of the quality of members. So that's hats off to you guys. Keep up the great work. The one thing I will say, and I promise I'll get into some charts here. The one thing I will say is that I've seen a lot of people recently kind of be takers and not givers. There's nothing wrong with asking questions and things, but if you expect like the community to constantly give all the time and you're just taking from people and not giving in return, what I will tell you with experience being here a while and running this ship for a while is that you will kind of just be ignored after a while, right? So it shouldn't discourage you from asking questions or anything like that. But if you're constantly just like, what about this stock? Should I buy this stock? Why is this stock down? I'm like, if you're new, there's nothing wrong with having questions. But understand if you ask 20 questions in a day, right, that the patience will be thinner for the community members to reply to you and take it seriously, right? And I encourage all of you, if you want to be a bystander, that's fine. We've got hundreds of people that are just bystanders. They just consume information. There's nothing wrong with that. I'm saying the people that are constantly asking questions and taking, It's a give take. If you want to have a discussion, an individual stock discussion, hey, what do you think about this stock? I did some research and I found out A, B, and C. What do you guys think? Not, hey, what do you think about this stock, guys? You're not going to get a reply. Like, just think about the audience you're with, right? And just read the room a little bit. And I promise you, you'll love it here if you just put a little bit of effort, and you'll get a lot in return, right? If you give zero effort, you probably get very little back, right? All right, so Chubb, CB, it came back to trend, so it was up here 302. A lot of these charts are aggressive. You got this 173 back September 2022 low. Huge rip up, like a lot of names, right? Anybody investing in 2022, unless they're a really bad stock picker, they've made a lot of money. We were talking about, wealth is created in bear markets. It's not realized in the next bull run. This is what I was talking about. Buying bear markets when it seems painful. You buy here at 231, it drops 183. You think, oh my God, I didn't sniper time the bottom. I'm so bad at this. My life's over. It doesn't matter. You bought at a range that was attractive and you made a lot of money the whole way. Simple. Now it gets tricky because it's going to keep going higher until it doesn't. And then when it pulls back and it, rockets up here to 343 and then pulls back to 298 a year later, you're like, oh, I should have trimmed some when it was up here. I should have bought some when it was down here. All that matters is, are you making money? Is your blueprint in check? What do you think the future of Chubb is? Why is this a secular growth trend? Is it disruptive? Why does this fit in your blueprint? And if you say, well, it fits in my blueprint because of A, B, and C. This is from Brad124. Brad, I think, you've been here for a little while, but haven't interacted with you a lot, I don't think. But it came back to trend, albeit an aggressive one. So this trend line is just like, it bounced from 183 to 302, topped out, range is 259 to 313. So this is 259 on the S3 support, 3 Fibonacci, R3, resistance 3. You got your moving averages. Yellow is 50 always, guys. The red is 100 and the purple is 200. This is a Fibonacci retracement. Of course, you can use, for example, Fibonacci. You can go R4, R5. I use the threes because they're most accurate. This is what I've always done, and it works for me. You can do whatever you want. Tools in the tool belt. So that's kind of where we're at. It could break down. It's at the trend. So if you really like the stock, remember fundamentals are first. 99% of this is fundamentals. The last 1% is technicals. If the fundamentals say, hey, this is a screaming buy, from a technical level, it could hold up here on this trend line. It already has, and it's kind of popped up. It's 283. So it does lean right now bullish because it's kind of held this trend, but it is expensive. This 200 days at 266 and this S3 is at 259. So keep that in mind. LRN is the next one here from Ray. We've got a crazy chart here. Like a lot of these, huge pop, $30. This is January 2023. Anything that you bought halfway decent quality, doubled, tripled. This is over a double. Crazy chart, 63 to 102. That's just from this port. This is just from October of 24. This is just from a month, not even a month ago. It's gone from 63 to 102. So this isn't something I'm, that excited about, unless the fundamentals just scream, oh my God, this is worth $300 a share. But this is going to find resistance at some point up here. This R3 is at 117. So it certainly has room to go higher. It could go another 15, 20% higher. Would I chase it here? Probably not. But again, the fundamentals would tell me that, right? Could cool off anytime. You've got this range here from 63 to 117, pretty big pocket there. VIRT, not VRT. This is Virtue Financial, VIRT. Most of these charts look the same. Big hole pops up, $16 here. This is February of 2024. You doubled your money in less than a year. Not where I buy stocks. I like buying them here and I like trimming them here. I like to buy here. I like to trim here. Can I go higher? Sure. I would rather buy here and I'd rather trim here. Well, I wasn't investing then. Well, you probably should have been, right? Now there are some excuses that are valid, like, hey, I'm 19 years old, or, but here's the thing, like, we have to take responsibility. There's nothing we can do about the past, right? But the reality is that if you're 35, 45, 55 years old, you should have been buying in 2022. The reason you didn't is because of fear of losing everything, and your friends and family and social media scared you to death to buy anything here. Now, if you're in Fired Up Wealth, you're buying all kinds of names down here. And it was like going to a candy store. There was still pain sometimes because you'd buy something at 21, it would go to 18 in this example. And you'd say, oh man, this is such hard earned money. I worked 60 hours a week and I invested and I lost 30% on this. Boo hoo. Well, in a year, you doubled your money. This is patience. Wealth is created in bear markets, realized in bull runs. You're realizing wealth in this bull run, and the bull run can go a hell of a lot higher than you ever expect it will. It could just keep going for way longer than you think it will. This stock could go to $45. The question I would have is, am I happy double my money in a year or two? Yeah, maybe take a little off the table. Fundamentals are still there. Maybe I, hold on to some shares. But you get these rips past the R3, it's going to consolidate at some point. A lot of them probably go high. If the market remains bullish, they're going to consolidate. Maybe it even comes back a little bit more than it already has, and then it's going to continue. But not all of them do. One bad earnings report, and all of a sudden, boom, this thing's back to the 200-day moving average at $25. Just like that. Algos, bam, dead, right? So that's it. 24, SMA, the 200-day moving average is 25. That's $10 lower. You got a $39 to $40 possibility on the upside, and it probably will consolidate and go to something like 40. Could break down any time. Who knows what that consolidate? A lot of times you see 50% retracements. So you take 16 plus 40 divided by 2, and in a year it's $29. And you see that time and time again. But the psychology is very hard behind that because you're like, oh my God, I'm going to get rich. Just hold this. It's going to go higher. It's very hard to be an investor. Simple in theory, but very, very hard to do. Market just opened. Hopefully, let me see something really quick. So 32% right now, Rocket Lab, 1937. I really should trim some at 20. I think I have it a little bit higher just in case it rocketed higher. And it could break down any time. Like the high was 1941. Like if it closed at 17 today, I wouldn't be surprised. If it closed at 21, I wouldn't be surprised. So, the thing is, retail, when they get excited and you start seeing articles and things, these can go a lot higher. And there's just what I'm trying to pound in your head here is that there's no way to know exactly where something like this is going to top out. You just have to be like, hey, I'm good at $20. I bought it at 4. I made a 5X in less than a year. If you would have said 6 months ago, hey, buy this stock and you'll make 5X in 6 months, sign me up for that. But we overcomplicate it because we say, well, what if we sell a little bit here and it goes to 30? Oh no. Well, I mean, okay. I still made 5X on the shares I trimmed, and I still own shares that still went up to 30. So like, what's the problem? But our brains just really screw with our heads. I don't know if that makes sense. Our brains screw their heads. But you get what I'm saying. I had donuts with Dad this morning. Not 1, not 2, not 3, but 4 Cybertrucks from Dad's. I'm like, man, what am I doing wrong? And I'm looking at these guys and I'm like, well, I'm it's a little judgy, but you're thinking like, do these guys have millions in the bank, or they just spend all their money on their cars? I don't know. It's not my business, I guess, but stuff like that crosses our heads. I mean, we're humans, right? On Semiconductor, I need a beer. It's too early. I'm kidding, mostly. I really don't drink that. In fact, since Hawaii, I've drank maybe twice, so I'm doing pretty good. Doing pretty good. But I am back on. I'm sorry, Dave. I'm back rotting my teeth, and whatever. I got vices. Not perfect. I've never told you guys I'm just like I'm the biggest regular Joe you ever meet, who just really likes stocks and invested, for a long time and made money. But if I would have known what I know now 20 years ago, I'd have $10 million or more in that primary portfolio. I made a ton of mistakes, made mistakes. I've still crushed it, made a lot of money, but that primary portfolio is mostly profits at this point. I know it's over 80%. I don't know exactly if it's 82.7 or 85. I don't, it's over, let's just call it over 3/4 of it is just pure profits at this point. A lot of it's like you sell something and buy something else. And so your cost basis looks like this, but really it's zero because it's like profits on profits on profits. So It could even be higher than that, but I know with certainty it's three-quarters of it is just pure profits. So I'm okay with that. And of course, I haven't had that portfolio for 25 years. I've been investing 25 years. That portfolio is only, well, it'd have been Microsoft might have been the first buy in that portfolio in 2012. So I guess it's, 12, 14 years old. But you make the money, if you really look at it, the wealth is created in those bear markets when I'm buying and everybody's telling me to sell. And if Fired Up Wealth was that safe haven you could come into there in 2022 in the bear market, whereas like, hey, other people are buying too. I'm not completely insane. My family's telling me that the market's going to zero. My friends are going to cash and put it under their mattress. But these guys are actually buying, and you know what? They've been doing it a while, and it's worked out for them before. So maybe it's not such a bad thing to buy in a bear market. Maybe this is a good place to be. Maybe social media isn't where I want to be on X and YouTube because they're all a bunch of toxic trolls. 90% of them, probably 98% of them actually, 99 maybe. Maybe I'm 90. We'll go 99. That's probably fair. 99%. Anyway, on semiconductor. Coiling 7450 resistance and leans bearish unless it breaks that. So if it breaks 7450, it basically will go bullish. Right now, it actually leans bearish. But this is that rubber band coiling where it can snap either direction, coils up tight, and or it goes. This one leans bearish, but it's like a 51% bearish, 49% bullish type of a thing. The downside possibility is probably 62, 63. This S3 is around 60. It probably holds 60. This blue line, the upside here's 81. This is one I don't have huge conviction on. I just bought it because I thought it was attractive at certain prices. Honestly, if it pops, if this thing went over like 90 or $100 in that range, I'd probably trim it out because I don't have a very big position. It's okay. There's nothing wrong with on. It's just not like one of the first semiconductor names that come to mind. Like, oh my God. Now, speaking of low conviction, sorry, Stu, this is one that I owned for a long time. One of the reasons that we're in India is because the management and board of directors from Skyworks that basically turned this company from rags to riches, SWKS. If you look at this chart, so these guys came in, right? So you like McDermott and those guys, like the CEO I interviewed on Discord or on YouTube. These guys came in this time period and took this stock from, $17 or $20 to 181. This is way ahead of itself, but they did well. And now this is one where it does pay a 3.3% dividend. So it's not that I hate the stock. It would be a DJI, type stock, 22 PE ratio. If you bought it back here, you made 1,784%. If you bought it at 168, you lost a shitload of money. I mean, this is a great chart to show you. It's not always what you buy, it's when you buy. If you bought it in 2000 at $58, you had to hold on to it for 14 years to break even. Some people will see that and like, but here's the thing about that. If you really liked it, you were buying it the whole time and you still made a lot of money. And that's the thing. Like if a company doesn't go out of business and you really have conviction in it, if you hold on and keep buying, more times than not, you make money as if it's a good company and it has a good balance sheet and all that. Now in spec stocks, it's the opposite. A lot of these literally go to zero, right? Like STEM is one that's basically going to zero, and Digital Turbine. There's some that, we've done videos on, we've talked about like, hey, there's spec 10x or zero. This is an exciting story until it's not. And those spec stocks a lot of times have very low cash. And so the problem is they have to dilute, or they basically run out of money and go boof. Now, lower rates in theory should help some of those businesses because they can borrow money simpler, but we won't go down that rabbit hole right now. Certain stocks are going to trade better than others under the Trump administration. That's just a fact. Skyworks is bearish under 94.50, and I would expect it to go lower. In fact, it dropped another leg lower this morning. It's down today, down another 3.63%. But last night, looking at the chart, I would have expected it to go lower. This S2 is 82.73. I think that's a decent possibility. Even 77 on the downside in the S3. Broke the trend here. I would expect something like this. Could always bottom anytime, could go lower. But that's kind of the area I would expect. I'm not saying you buy it here necessarily. I don't think it's that attractive, but that's just me. Maybe if it came down to those lower prices, I would consider it 75 area, something like that. I might consider something. It's got 4% short interest, 3.2% dividend. There's nothing wrong with the company. I mean, it's got a decent balance sheet and everything. It's got decent profitability. A here. Growth is a D minus. That's the problem. Is the growth in this area. Skyworks has huge exposure risks. I haven't studied this for a while, but if correct me if I'm wrong, but to like Apple, for example, is one of the big customers. And so like there's just a lot of risk with a company like this because if one of the, say three of their customers is over half their business, just throwing out a hypothetical, and one of those customers goes away, makes their own, right? And Apple's doing that more and more. They're starting to make their own stuff, get away from Qualcomm and others. That's a huge risk because a company like this can lose like 20% of its revenue or even more, and the stock can just crater lower and lower. So to me, this is one, the risk reward just doesn't make sense. That's just me. It doesn't mean you can't make money, and you probably do over time. But if I were listing 100 semiconductor stocks, it would be very low on that list, kind of a thing. Oh yeah, yeah, yeah. Airbnb. I mean, I don't. I try my best, guys. And I had 133. I said, hey, I'm going to buy some here and I'll buy some here. Here are the levels. You buy those levels, it rips up to 148. You could have easily trimmed that from 110 to 148. I didn't, and now it's back down in this range, 134. Now it's probably going to hold up that level. Kind of makes sense. You got this retracement. This is a great fired up wealth DCA buy. This is how you buy correctly when on the way down. Because I wish that you could say when it was 133, oh, well, it's going to go to 110. I'm just going to wait till it's 110 and then I'll sniper time it like a lot of the people that in 2022, they post like, I bought 5,000 shares of Airbnb at 110.40. And the reality is, it was, 5 shares at $117 or whatever. But to say you can know this is going to happen with certainty, there's no freaking way. It's not going to happen. So you buy in levels. You buy a level, buy a level, buy a level, or you just say, hey, unless it goes to 110, I'm not touching it. And if it goes to 110, you buy a little heavier. You could do that too. I like to just buy things on the way down, DCA, and then as things get higher, like if this stock, for example, if it went to 170, 175, I'd be trimming the stock, buying 125 and 110. So is it a buy at 134? It's not bad. It's kind of in the middle of this range. I would have preferred to just buy it at this level and lower. It makes more sense to me. That's just me. You got to do what works for your money, right? So that's where we're at. I mean, leans bullish, probably goes 150 upside if the market stays intact. Here's the thing with all these stocks: if the market breaks down, bets are off. All the stocks are going to go down. If the market sells off 5% tomorrow, this thing can be back to 110. Hell, it could go lower. There are no guarantees. People want this guarantee, like, what stock can I buy today that will just go green the rest of my life? It doesn't exist. These are just possibilities, and you make decisions strategically, use tactics to buy what works for you that fits a blueprint. Here's the thing: if you really like the company and you really have high conviction and you love the management and you believe in it and you want to own part of the business, you buy the stock. You probably buy it at 133 today. Could it go to 100? Yeah. And then you would buy more of it. Or you say, well, I don't like it that much. I'll buy it if it goes to 110. Well, then you could have bought it at 110 when you had that crystal ball ready and you knew it was going to happen. You could start a YouTube channel and be a fortune teller, right? Such bullshit. So much bullshit on YouTube. Pisses me off. You get these ads like, oh, I'm going to show you how I turned $5 into $5 million without even looking at a chart. Yeah, sign up for this course for $2,800. And people do it. But I can't get someone to pay $60 a month for a masterclass series that literally gives them a cheat code of like, here's how you make money in the stock market. Oh, I don't want to do that. Oh my God, it's $60. Okay. Whatever. Do what's best for you, man. ABBNY. I've actually thought a lot about that. And sometimes I wonder like if that's the wrong approach. The idea behind it was that if I do a good job, right, and I'm helping you, I would rather just make it a monthly thing where it's affordable and you pay and you're getting value, and every month you're paying a little bit versus like pay $3,000 up front for a course or 5,000 for here's 20 classes or 5 grand. I mean, I treat it like And I'm not a college professor. That was what I wanted to be when I grew up, but I'm not. But I treat it like that. And I know that I've gotten better and I can improve, right? But the content's there in terms of the information to help you be a better investor. And sometimes I wonder, like, if that's the wrong approach, like, because I think people get the wrong idea. The idea is like, hey, if you like it, you're going to be here for a long time. And yeah, you're paying money over time, but it's spread out and it's not like forcing you to pay up front. It's like, hey man, if we're adding value, I want you to be here. If not, hey, you signed up for a month and it wasn't for you. But I want it to be of value to you, right? And so you'll stay for a long time. And so instead of charging like $5,000 up front, it'd be over years of time, right? And you're going to get that investment back tenfold by being in a community like this. Sometimes it's just hard to see it until you really get it. And if you're younger, it's I think it's really hard to grasp the value you get from something like this. And I'm not overselling it. I'm not bullshitting you. Um, what you get from a community with these members is just it's priceless, and you can't really. There's nothing else like it, right? So you're in the right place for sure. This is OTC, over the counter, right? So you have to be mindful of that. I generally I would avoid these. Now, there are some legit, like this is probably a legitimate company. I don't know anything about it. That's just listed OTC because it's foreign. There's definitely situations like that. But I still avoid these for the most part. If I'm going to buy a foreign company, I would just buy it from a foreign exchange and pay the foreign exchange transaction fee. This is just, here's the thing. Like, I don't know anything about the company. You're asking me to look at a chart. What do you think of the chart? Here's what I think of the chart. There's a big old air pocket here. I don't like that. So what do the fundamentals tell me? The technicals kind of give me caution, right? And now I have to do a lot more homework. 99% of the puzzle, this is only 1%. This tool is telling me, hey, this seems a little bit frothy here. There's a lot of danger if something like this breaks down. It could literally break from 56 to 45 or something like that. Or this trend line's all the way down at 42. But it could be a great company and there could be a fundamental reason for this pocket. And if you look at the moving averages, that's only down to 52. So that's just my thought when I look at something like that without knowing anything more about the company. Pablo wants to look at Skywater Technology. This is a spec stock. And this is one we say 5x or 0, not 10x or 0. So your upside is actually more limited on something like this than a Rocket Lab. And if you don't understand that, don't buy the stock. If you do own the stock, you're probably still green, even though it's 844, because you're probably buying it in these prices. I think I'm about par on the main, something like that. But I actually had an order to trim at $12.77. And of course it didn't get there. It got to 1141. And I considered trimming it closer to 12 before earnings, but I didn't. And it's okay. I like the company. There's certain risks with companies like this, guys. I mean, I don't know how to I don't know how to explain it to people to really like, do I do a bad job? I feel like I do a shitty job. I have to do a bad job. I have to. Like, I need to be better. Like, how do I convince people like, okay, this is a $398 million market cap, right? So this is a $400 million market cap. Now we could pool together. Let me do some quick math on this. Bear with me. So let's say about 100 of our core members, give or take, could pool our money together and essentially buy a market cap like this, right? So like Fired Up Wealth could own this company. Like if we took all of our assets and bought this with just a portion of our members, all right? To give you some perspective on that, all right? Nvidia is $3.64 trillion. And it just wants to tease me with this 150, 149.33, 149.77. Just, I told you it's going to break 150, and I'm off by 23 cents. Damn it. But we cannot pool our money together and pay $3.64 trillion, right? But we could buy Skywater. Does that help at all? Like, this is a tiny, tiny small cap. So this literally could go to this would only have to go to what, $2 billion to give you a 5x, which easily could do that. And it could easily go bankrupt and be worth nothing. So if you buy it, that's your risk reward. Do you want that to be a big part of your portfolio? I don't. Do what's best with your money, is what I always say. The range here is 678 to 1280. That's those two red lines. You're at the lower end of that range. Most small cap semis have been selling off, so it's not really surprising. And this is spec. If this thing isn't rocketing, don't ask why isn't Skywater up. Well, go listen to the earnings. Go do some homework and understand what the hell you're buying. Simple as that. Qualcomm. All right. I told you I wouldn't touch this over 175 when it was 200, 217, 230. Here it is at 161. Much more attractive here. An interesting one. Out of all the names today, this is one that I look at like, hey, this probably could go a little bit lower, but might not be a bad opportunity for a high quality dividend type paying company. Certainly our risk with Qualcomm as well, with some of the exposure to larger customers. That's one thing that I don't like. But you could say the same thing about Nvidia. You take away the big five in mega cap tech, take one of those away, and Nvidia, and in fact, Amazon is building more and more chips to compete with Nvidia, and that will happen. That's going to be a cycle. I've told you over and over. Nvidia is not just going to keep going up forever. There will be a cycle to that. There will be a top to that. I still believe it'll go over 150. I think that you could see, 160, 175, 200, but I have no crystal ball there. The story could change on that in a heartbeat. Nvidia could lose $1 trillion in market cap in a week, and I wouldn't be surprised at all. It just did that. It just did it. This stock was just $102 and it's 147. So you're talking about a $1 trillion gain in market cap in a couple of months. This is a big move, right? Over 5 years, 2,800%. Fired Up Wealth favorite 2022 must own stock for any portfolio of any risk tolerance. You would have been buying it. Some people bought it at 22. And it was not 22 then. It's been on a split, but let's just pretend. People bought this stock in the 20s and then gave me hate mail when it was 12. And I said, hey, I'd buy more if you really believe in the company. But instead, they bought it at 25. They sold it at 12. And then it rocketed to 148. And then you hear, man, I wish I would have not sold it at $12.47 for a 50% loss, because I would have made, whatever, 1,500% or whatever the number is. That's investing. Take some patience, and understanding what you own is going to help you hold on to something when it's down and buy more versus panic selling the full. If you don't do your homework, you don't put the time in, you're not going to be a successful investor, because even in this period, we are going to have another bear market at some point. Could be next year, it could be 2 years. If you haven't done that homework on the front end, you will be the person that's buying stuff at the highs this year, next year, wherever the hell the top is, and you're going to be selling those lows or those 50% reductions. It's going to happen. And there are people watching, it's going to happen to you. And there are people that are watching, it's going to happen to you. And you're going to send me a message saying, what do I do? Well, I told you November 13th of 2024, this would happen. Give it a couple of years. It's going to take some time. I'm not bearish at all. The stocks market's going to keep going higher, and I'm just going to keep printing money, and I'm going to keep trimming, and I'll trim. Keep buying. I'll keep on trimming. Am I going to sell? Am I going to buy some stuff? I'm looking at a few things. ASML, there's some China risk to that still. I think a lot of these semis, you have to be aware there is significant risk. All right. If you're buying semiconductor stocks or equipment makers, there's significant risk to buying any of the stocks, even the ones that are down, even Lam Research. Why is Lam Research down? Why is ASML down? Applied Materials, KLAC. We're going to look at KLAC here in a minute. there's huge risk with China. And if you haven't been investing for a while, you weren't investing during the Trump administration, trade wars. And you're going to see, I think that, I was surprised at how aggressive Biden administration was at continuing that trend from the Trump administration. And I think you're going to see some major pain and volatility because of US China relations and trade war stuff. And semiconductor stocks at some point in the next year, 2 years, probably less than that, but in the next couple of years, somewhere in that time frame, you're going to see massive volatility in semiconductors and probably some big sell-offs. It's November 13th, 2024. Write that down. It's going to happen. Anything you buy right now in tech, in semiconductors, anything that has exposure to China could be significantly lower down the road. Just saying. I'm not saying I wouldn't go buy some Lamb or ASML, but I might save a little bit of room in case that pans out. And maybe I'm wrong and it doesn't happen, and that's okay. And that's, I don't have a crystal ball. I'm not trying to be a genie or a fortune teller. I'm just telling you a lot of these are down because it had AI hype that came out, but there's also going to be some concerns. And here's the problem. A lot of money that comes into the market doesn't have that insight because they weren't investing in 2016. The majority of retail investors weren't investing in 2016, 17, and 18. They were investing in 2020, 2021. There's going to be some interesting stuff coming with the Trump administration. And just believe me when I say it. Okay. So I'm not saying that I wouldn't buy some of these stocks, but I'm saying even if Qualcomm dropped to 125, 130, it wouldn't surprise me. But see, that's the thing. Like, I don't want to buy here. I might buy today at 160 saying, hey, I think there's a chance this goes to 125. So I'm only going to buy like a half position in these levels. So I might fill a half of a position here and save room in case it goes here. And then my cost basis is basically, in the middle at 142, if that happened hypothetically. Now, if I buy in this area, and say I buy today a starter position, and all of a sudden it rockets up to 230. Okay, well, I made money. Oh my gosh. I should have bought more. I would have, could have, should have bought more when it was that price. You made money on it. Who cares, right? You're hedging your risk here, right? You buy some at 161, it drops down to 155. You buy some more, and you're buying it as it comes down. Now, a lot of people, especially if you're a trader, you're going to say, well, that's catching a falling knife. Yeah, okay. But I'm not buying off of the charts. I'm buying off the fundamentals. And the fundamentals are saying, hey, this is a trend. And I haven't done any fundamental research on this recently. I'm saying if the 99% fundamental story pans out, I'm just looking at the chart. This is how I'm going to buy. I'm going to use that chart to get better entry and exit points and make decisions on how to enter a stock or exit a stock. And if I fill this position in, and it, this happened on semiconductor, I thought maybe it could go lower. I bought a small position. It rockets up, high quality problems, we call it. Goes lower, I've got room to add more. The problem is that you get in a hurry. We get in a hurry as humans, right? You say, okay, I built my blueprint. I'm so excited. 2025 is going to be the greatest year. My wife and I are going to have a 10-year plan. We're going to be rich, and we're going to live in Fiji and live on a yacht, and oh, this is great. So my blueprint's perfect, and Qualcomm fits my blueprint, and I need to own this. I want it to be 4%. It's a buy. It was this 230. It's 161, and it's going to rocket up to 230. Well, it might, and that might work out, and you look like a genius, but you're going to do it again the next time, and it won't work out. What I mean is you say, oh, I need to have 3%, and you go load the boat and just buy it all in one day here. It could work out really well, and you're like, man, I'm good at this. You do that consistently, and you're going to get your ass kicked. Because more times than not, if something's under pressure like this, it's going to have more pressure. I'm not saying that Qualcomm's going to go to these levels. I'm giving you a hypothetical. There's a good chance that Qualcomm probably finds buyers here and finds support and goes higher. I'm just saying, if I were buying the stock, though, I wouldn't go all in at this price. I wouldn't. You have to decide with your money what you'll do. But I might nibble some in this circle, but I'm only, if I want 2% of my portfolio, I'm not going more than 1% in this first circle, and I'm leaving 1% here. If it never gets to this circle and it rips up, high quality problems to have, guys. If it goes lower, well, I can buy in. Now, sometimes you buy here and buy here, and all of a sudden, especially with spec stocks, this happens. You buy here and buy here, and now the price is here. Now, what a lot of us want to do is, oh, the price is here. I'm going to triple down and fix my cost basis. Well, it depends. On a spec stock, probably not. You never want to go over 1% on a spec stock. So if you have 10% of your portfolio in spec, you need at least 10 stocks at 1%, preferably though 20 stocks with like 0.5% in each. So like Rocket Lab, if you started out at 1% and it's now 4% of your portfolio, you have some hard decisions to make. It's a high quality problem, but you're going to have to decide what you want to do with it. Do you want to, say like Nvidia, I've got 15% of my portfolio. See, here it is, $20. And of course, I had 2177 and it hit 2144 and it broke down. Now it could consolidate a little bit. Traders could pile back in and this thing could be 23, or it could break down and close the day at 17. I don't know. But I told you guys last night, 22. Stu, if you're here, you can back me up. He said, hey, it could go a little higher. I said over 20, probably around 22. Here it is, 2144. Now, it could be 25 tomorrow because enough retail investors could pile into it where it could, all this is, guys, is buyers and sellers. If there's way more people buying than selling, the stock's going to go higher. If a bunch of people are short in the stock and they have to close that short position, you're going to have a squeeze. And now you have nothing but shorts covering and retail buyers buying, and the stock just keeps going higher until people are satisfied to say, hey, I'm good at, $21 a share. I'm out. And again, this is a disadvantage for me. Like I probably would have trimmed at that, I would have adjusted it. So if I were on my own before Fired Up Wealth, my order was at 2177. I would have been looking at the chart and I would have adjusted and I would have sold it at, 2137, did a quick adjustment. Now it's under 20. And that's okay. I mean, that's part of my job. And, I can't always be everywhere at once. I've been on the mic here for an hour. But there's a good chance that it continues to go higher if there's still more shorts, right? So what's the short interest? Not shit. 15.1 million. So percentage of float here, 20%. I don't know how much has covered today, but I mean, there's a decent chance this still has more room to go up because, not all the shorts. Let me see how many days. Let me just see something. Days to cover. Well, this is back from October. So this shows like 4.5 days. I mean, it could be 3-4 days, something like that. So you're going to see some volatility on this stock over the next few days. And it doesn't mean it has to go to like 25, but it certainly can. It just depends on how all that pans out. And there's really no magic formula to know exactly how it works. I won't be surprised to see it, 23 to 25 in that range. But like I said, it could break down and close at 17 and never break 20, for months or years. It could happen, right? Is it worth $10 billion? Maybe, maybe. 55% growth is definitely legitimate. It's 55% for this quarter, but I mean, it's got some work to do, right? It's still profitable, burning cash. It's not like it has a P ratio or anything like that, right? Price to sales is 17, but that was before a 34% pop. So, if you take 17 times 1.35, I mean, it's a 23 price to sales. So it's not cheap. Doesn't mean it can't go higher because that's, retail doesn't buy off of fundamentals. They just buy off of momentum and maybe charts. And so to predict exactly where it's going to go, good luck. Your guess is as good as mine. HXL leans bearish here, range 51 to 70, could bottom anytime, but leans bearish. That's kind of where this one's at. I'm going to go a little bit faster through these. Kind of a big range here. It does lean bearish though. Kind of a 51% bearish chart kind of a deal. Datadog, I feel like we talk about this one a lot. I mean, could coil and pop. This is something 100 and less. Most of our buys are 75, 85. I like the company. I like the stock. It's a little expensive, maybe at 125. Not ridiculous, but I think it's a little bit overvalued. a decent chance, you know, if you see any sort of market sell off, you probably see 110, 115. This thing could even go back below 100 at some point on earnings miss or anything like that. So that's a tough one. It really is. You know, those kind of names, they make some big moves. And what's a little bit disappointing with Datadog is it's made a lot of big moves on the downside, but not as many on the upside. So keep that in mind. You know, like the 20% spikes either direction. BSX, huge run, like many of these names currently above moving averages. I mean, it's just $34 to what is this, $90? This is Boston Scientific. This isn't a meme stock. This is Boston Scientific giving you a 3x in that time period. So, you know, if you weren't buying back here, do you want to buy it now? I mean, it's tough. It's really tough. You have anchoring bias. I get it. But if you're investing and you know, this company's been around a long time, I've been buying somewhere before all-time highs. That's just, it's a hard pill to swallow, but it's a pill you have to take, right? Currently above moving averages with 93 R3 upside prevails, 85 support. Looks a little expensive just looking at the chart. And then you'd have to go look at the fundamentals and see. 4 is the community portfolio buy, you know, quite a bit lower. Nice spike here. You know, this is the area you kind of want to buy down here. Now you're above the R3, above the, you know, this is another kind of parabolic chart, area trim, not necessarily buy. And you can kind of read through the yellow. You can go back and read through that. You always pause the screen if you guys need to, if I'm going too fast. ABBV was way ahead of itself. I mean, I don't think it should have been $206 myself. I treat it as income stock. It's really a DGI, but it's kind of a hybrid. It's now under the S3. Um, it, it should find buyers because of the dividend and decent quality balance sheet and stuff. But this is the air gap here. So even though, you know, you have a gap down, but even though it's fallen this far, and this is what I'm talking about right here. So like when the stock is up here, you've got basically this huge gap from the top all the way to this trend. You know, this trend is down here at like 150, right? So to see a 50% consolidation is pretty normal. You have a gap down. So, I mean, it probably finds buyers in this 170 area, but if it came down lower, it wouldn't surprise me. This is one you mostly own for dividend. So as long as you think the dividend safety is there and all that, it's probably attractive at these prices, but I would still prefer it lower. I'd want something probably under 150, which probably doesn't happen, but that's where it would pique my interest. Twilio, that's one that I sold. It was a spec stock that now it's like woulda, coulda, shoulda, woulda, coulda, shoulda, woulda. You know, if I would have waited a little bit, it had a big pop and it would have been another 10 grand. Well, in the grand scheme of things, on $2.5 million, it's not really, you know, I'm not losing a lot of sleep over it. It sounds crazy, right? Like 10 grand. 10 grand is still a lot of money to me. But you also have to look at the numbers, right? You know, if you're talking about 2.5 million, 1% is 25K. So, you know, it's like you have to adjust your head to those different numbers. You know, even like a small move yesterday is like a $20,000 profit, you know, unrealized gain. Twilio, parabolic pop, short squeeze, gap up. I'd be trimming above the R3. You can always go higher, just like all these. You want to guess where it goes? Go ahead. Throw a dart wherever it lands up here, because I got nothing. There's no way to know exactly other than the fundamentals. And the fundamentals, the chart can't tell me, right? So what are the fundamental? So for example, if I look at this and say, okay, I'm going to compare EV/NTM revenues, and I'm looking at two other companies that are similar, and this one is I did this with Klaviyo. If you remember the YouTube video, I said, hey, with Klaviyo, like I think it's worth this much on the EV/NTM revenue, and so it's got a 35% upside, and it went up like 50% from those levels, and then I sold it. And I just thought it was undervalued. So that's the kind of research and homework you do before you come to the charts, right? Because the chart's not going to tell me what the fundamentals are, because it could still be undervalued. It doesn't mean it can't consolidate in the short term, but you might buy a stock like this and maybe it's a 200, you think it's worth 200, and it might take 2 years to get to 200, but it doesn't necessarily mean it's not a buy or you have to trim here. The idea with trimming here is if you bought it here, you take a few chips off the table because you can't necessarily predict what happens up there. This one's got me a little bit stressed out. I wish I would have trimmed this at 21, but oh well. It's not that big of a deal. Again, I'm talking about a couple grand here and there on that portfolio. It doesn't really matter. All right, MSI. Looking to trim. Elizabeth, thanks for all your help with every single week with chart day preparation. It helps me a lot. And I know that sometimes you feel like you have to be the bad cop. Now you kind of get a glimpse of what I have to deal with on a daily basis. It's hard because people are all excited. They want you to look at their ticker, and then you kind of like, well, we can't look at that ticker. Why not? Well, read I know there's a lot of guidelines. People are busy. It's a lot of information to read through. It's a little confusing. I get it, but thanks for doing that, stepping in, being the bad cop for me once in a while. MSI, same deal, above R3s and moving averages can go higher. I mean, all these charts are the same, guys. I'm not buying any of this crap. I'm just not. Unless the fundamentals say it's still insanely undervalued. 9 times out of 10, if I'm just constantly buying charts that look like this, I'm probably not doing very well in the markets. CLAC, China risk, understand it. It looks exactly like the Qualcomm. In fact, if you pull up Lam and a lot of them, they had these huge AI pops pull back. It's a combination of AI momentum fading plus Chinese exposure risk. ASML dropped the bomb first, right? This one actually broke trend. We told you a couple weeks ago that you could see this circle, and this is where I'm more interested in buying, but it's kind of clinging on to the top level of that circle. Lam Research, another one that broke the trend, right? So very similar to ASML. So if I look at those ASML and Lam, this should break the trend as well if it's kind of following suit. It doesn't mean it has to, but there's a decent chance you're going to see it in this range at some point. Doesn't mean it has to happen. I just think this is the same kind of deal. The story I talked about earlier. I might buy a few shares here, but I might save room lower, right? Unless I have crazy conviction and I'm like, I'm going to buy a third here. It's even then I'm only buying a third, or maybe I buy half, but I'm not going all in ever generally on anything. And almost with certainty, anything you buy at some point, it's a little bit lower, it seems. So when you're a new investor, you get this in your mind, like you're just going to buy and it's always higher from here on. It's not going to be that way. A lot of stocks you buy, you're going to buy and they're going to be red in your portfolio at some point, and then all of a sudden, boom, they're going to take off and make a bunch of money. If you read One Up on Wall Street from Peter Lynch, he talks about his clunkers. You're going to have some clunkers. I've got clunkers. Snowflake is a clunker. I still think that I could fix her up and drive her, kind of a thing, and that's why I keep the clunker. But it might end up in the scrapyard too. Right now, I'm still holding it. I still think that there's life in the future. And remember, when I buy stocks for 5 years or more. So Snowflake's always been a 20-30 type of a play. And so you can't measure it necessarily. If you're down 15% on it right now, I don't necessarily measure that as the final result quite yet, right? Because I'm not at my time period. Could I have done a better job DCAing? Yeah, I could have done a better job DCAing, but it is what it's part of the process. Elf Beauty, last time we talked about this, so you got completely dismantled. This is why you don't FOMO chase. If you bought at $88, you'd still be ahead. But this is where it's tough, right? Because you probably say you bought it at 88 and you trim some at 184 and it goes to 221. You're like, man, why did I sell at 184? I could have sold 221. And then it messes your head. It goes to 150. And now you're like, I'm so smart. I trimmed it at 184. And then it rips up to 219. And then it drops all the way down here and you're back to where you started. But if you trimmed, at least you took some profits here and you're in a much better spot here than if you just held the whole way through this whole roller coaster and never took any chips off the table. This is why I like to trim, especially parabolic runs, because this happens more time than not. It's just a matter of time. And you can look at many charts that look this way. But it found buyers around $100, now above R3. Always hard to chase 30% moves like this, but can go much higher too. Fundamentals first. Trying to get back to this trend. It was below trend. You're talking about $100 to $130 pop. That's a big, significant move in a short amount of time. Uber looks like it's supposed to say algo, like also trading. Algo. This looks like algo trading back to 200 SMA. So it just basically a snap back to the 200 SMA. In fact, it broke it a little bit, but range is really 59 to 93. This is the S3 here, 59, 93 up here. You're kind of hanging out in the middle. And that's kind of the thing you buy here, but you know that it could easily go here and it could go even lower, right? Because you can put an S4 and an S5 and you could do all kinds of things, right? These are generally the ranges, though, that stocks are going to follow. If you look at algorithmic trading and things like that, this is the ranges generally they're going to look at S3 to R3. Um, if you're in the middle, if this thing came down to this under 60, this is where I'd be interested in it. I don't think, I think there's a possibility basically it's a 50-50 ball here, right? But I'm one of those guys, like this isn't a high conviction type name for me personally. I think it's interesting. And if it comes down here, I might buy some. If it pops up here, well, if I missed out on that run, I'm going to sleep okay at night. I'm not too worried about it. It's just me. First Solar, back to trend area, range 141 to 279, 174 support. If it breaks that, so basically you got $174 support. If it breaks that, which is really fragile, it's at 181. If it breaks that, you can see like that 150 area, 146 to 156, right? Even 141, the S3. But once it does bottom, which it could bottom anytime, especially on this trend, it's kind of getting to the area. I think it could pop to 200 to 225. This is one that's kind of selling off with that Trump trade, right? It's an anti-Trump name. So some names are doing really well because of the Trump trade. Others are going to do poorly. This is one that's going to sell off because, you know, the administration and people's beliefs, especially traders, that, okay, you know, this administration is going to spend money on defense and oil, and this is going to spend money on green energy. And you get the idea, right? So this is a lot of trading movement and momentum, and really just, you know, even money managers and things and hedge funds and institutional investors that are just positioning, because remember, Wall Street's about 12 months and not 12 years, right? It's like they're going to get their performance bonuses off 12 months. And if they think that these are going to be laggards and not perform, I can just dump this at a small profit or whatever it is, right? And I can go pile into whatever Palantir and ride retail momentum and make an easy buck and then rug pull that. And then I can always go back to First Solar later when retail is all capitulated and it goes back, you know, to the S3 area or something like that. This is hypothetical. But that's kind of the thought process behind some of those Trump trades. Any of this stuff helpful, or am I just talking to myself? I don't know. Uh, I mean, you could tell that I like this stuff because, I mean, I just hit record and I start going, and sometimes I, you know, it's like, whoa, I'm going a million miles, you know, trying to go a million different directions, trying to stay focused. But there's just so much to talk about. You know, there's so much to talk about, and I know that these get long. You know, we're at hour and 15 minutes or something. I try to keep them around an hour. Um, you know, as far as real talk, I try to do it throughout the video. But the thing is, guys, like, I want you to realize, you know, if you haven't already, most of you have, I think, the whole point of investing is to make money, right? Um, but you look at it differently than just trying to get rich quick. You're owning parts of businesses, right? And you're using a tool, money, to generate more money, more tool. Tool, you know, money is a tool to get what you want out of life, right? So as long as you're making money in the markets, none of it really matters. Like all of the, oh, I should have bought at this price and I should have sold this price and I should have done this, I should have done that. None of it really matters. Um, because at the end of the day, you're making money. But we convince ourselves that we somehow, okay, this is, I'm taking this serious. I'm managing my money. I have to be perfect. So I have to know exactly what price to buy, and I have to be right on every stock I buy, and I have to trim at the right prices, and I have to do this all perfectly. No, you don't. You don't have to be perfect at all. You're going to make mistakes. All that matters is you make money. That's it. You're advancing your wealth. You're going to have all kinds of mistakes. We try to help you avoid as many pitfalls as we can, but I'm still going to make mistakes too. Our jobs are just to minimize mistakes the best we can and to try to buy stocks that we think are high quality businesses that we want to own part of those businesses and to generate money off of those businesses. That's it. I'm not married to a stock. I don't owe the stock market anything. The stock market doesn't owe you anything. It doesn't owe me anything. It's a business transaction, and it's there to really take your money if you let it. So that the whole idea behind the stock market is about buying and selling, bears and bulls, and fear and greed, FOMO and full, and that's it. And once you can kind of half-ass figure it out, like I have, I don't have it all figured out, but once you can half-ass figure that out, it just simplifies it. It's the aha moment, like, oh, I don't have to be perfect. And oh, I bought this stock and it was wrong. Okay, it's part of doing business. How many businesses fail every year? A shitload. You know, I've had multiple businesses. Some have been really successful, and I've had failures. Anybody that owns a business can tell you that even if they've only owned one and it's been successful, that it wasn't easy to get there. There were struggles. They probably had to dump their life savings and go through a lot of painful moments to kind of get through those tough periods. Sometimes businesses fail. Often they fail. So I mean, if I can go try to start a business and there's a good chance I fail, why can't a spec stock fail when I don't even have control over it? It's I'm buying a stock of and owning part of a business, but it's a speculative idea that could be a huge winner and make me a ton of money, or it could basically lose all my money. And it's part of the it's part of doing business. Millions of businesses are created, thousands, let's say thousands and thousands of businesses are created every year, and thousands of businesses go out of business every year. Stocks are no different. Some of the largest companies in the world won't be in existence 10 years, 20 years from now. Sears Roebuck used to be the shit, and Kmart and Shopko and Enron, and there's a million companies that are not a million. I'm being hyperbolic again. There's hundreds, thousands of companies that, if you look at the S&P 500 from 20 years ago, there's only a small percentage of those stocks that are still around that are continuing to grow and do well, like the Microsofts and things. But um, even going back 10 years, that's what I'm thinking with Microsoft. And you see some of those infographics. The whole buy and hold forever mentality, it really screws with retail's head. And you see it all the time, like 10 stocks to buy now and hold forever. Oh, please click my link. We're a clickbaiting firm. That's what we do. And I hate that shit. I hate it so much. I hate it. You don't buy and hold anything forever. Like, do you buy when you bought your first house? I remember I built my first house. I built it, like physically built it. I was a general contractor. I did the framing myself. I said, I'll never move from this house. I put all my blood, sweat, and tears in this house. And I remember my aunt said, you're not going to live in this house forever. It's not even big enough for what you're going to need when you have a family. I'm not going to have kids. What are you talking about? She's like, you're married. You're going to have kids. It's just a matter. Well, you don't tell me what to do. I'm 25 and I know everything, and screw you. I got the whole thing figured out. I know everything. You know, I didn't. And she was right. I had kids and it was one of the best decisions I ever made. And don't live in that house anymore. So you're right. But it took 10 years, almost 50. Well, hmm, um, I don't know, 15 years, we'll call it a little less, 13 years. Took 13 years for some of that stuff to come to fruition, but it happened, right? So I definitely don't go into the mindset like I'm going to buy this stock and hold it until I'm 70 years old. Like, hell, screw that, man. Like, if it makes money, I'm going to trim some and I'll probably hold some shares. And if those shares don't work out, then oh well. I mean, I just simplify the whole psychology mindset by going to house shares on most of the things. And you could say, well, if someone said to me, you've trimmed Nvidia this whole way. Imagine if you haven't, it'd be worth that much more. Okay. But if I would have done that same approach with the hundreds of other names, I'd be definitely not further ahead, because a lot of those names, basically, especially the smaller caps and things like that, they never come back, right? They go to zero type thing, or they're trading OTC for pennies, right? Rocket Lab is now $20.80. High 21.44. Insane, guys. 42%. Don't think for 1 second that moves like that are solely fundamental. Please understand this, right? This is where a new investor, especially in retail, really screws with their head because they see that, right? So imagine that you're new and you see that, you're like, oh, they you don't know anything. You don't know what you don't know. Like they had a great quarter, and these guys easily be like $100 billion company someday. And look at this, the market cap of SpaceX. Yeah, that could happen. That could happen. But the stock didn't go up 40% in a day just off fundamentals. 20% short interest is part of it, and it's a meme stock with lots of retail momentum behind it. That's what makes the stock price go higher. Think of it as a house. If you list your house, right, and you're the only house, the value of the house is going to be more. It's all about buyers and sellers. So if you're listing in a market where, think of a couple years ago, you could have listed any house and it basically sold. It would sell overnight because there was just a supply and demand issue. There's a shortage because during the pandemic, houses weren't being built, nobody was working, and then everybody decided, hey, I've been cooped up, I really need to change. So you had more people buying houses and making life changes and less houses available. And you have this huge supply chain, supply and demand economical issue, macro issue that drives the prices higher. If everybody and their dogs, sisters, goats, uncles, mother, and your Uber driver and your next door neighbor who's never invested in a stock before starts talking about Rocket Lab and they all want to own it because it's all going to make them rich, well, then the stock's going to go higher because more people are buying it than selling it. More buyers than sellers, the stock goes higher. More people selling than buying, the stock's going to go lower. So now the sentiment is dog shit on, Indie and Navitas. A year ago is the opposite sentiment. And that's why you trim when you have the opportunity to trim, because then when it does do that, well, it's not that big of a deal because you actually didn't lose any money on it anyway, because you already took your initial investment out and it was just house shares. It's pretty simple if you think about it. And yeah, you could always, the opportunity cost of like, what if I wouldn't have taken out my initial investment? It'd be worth this much more. Yeah, it would. But it also, on the other side of it, just simplify it. It's like, it just makes the whole game easier to win. Now, if you're a new investor, you don't necessarily have to do that. But the biggest thing is that you need to invest in a quality portfolio. If you go buy 5 meme stocks and put it in a Robinhood account, that's not a portfolio. I see people on X, here's my portfolio, and it's like 8 SaaS stocks. Like, that's not a portfolio. I mean, you can call it a portfolio, but a portfolio can't be just a handful of stocks in the same sector. I don't care what you tell me. You can call it what you want, lipstick on a pig. I don't care what you say. It's not a portfolio, not in my eyes. Portfolio needs to have some diversification. And yeah, I invest heavily in tech. Like, between all of my assets, I have something like 60% in IT, information technology. And that's the area my wife and I both worked at. I mean, we're okay with it, right? We understand there's risk with it and all that. But technology is the future always. I mean, it always is. Even when I'm gone, tech is still going to be the future. Um, you know, Kmart and Sears Roebuck, those aren't buying retail brick and mortar. Go buying in GameStop and AMC. That's not really my forte. That's not my thing, right? That's not the future. Technology is the future. Robotics and AI and space exploration, all these things that we talk about in Fired Up Wealth. And they can make you a lot of money, but just be careful when things get parabolic and frothy. Understand, if you do trim, it's going to go higher, especially with time, if you're right. And you just have to be okay with that. And if you're not okay with that, you also have to be okay then not trimming. And if the stock drops 50% after 100% rip, you have to be okay with that pain too. And there's nothing wrong with either decision. You got to decide which is best for you, right? I'm getting tired, guys. Hour and a half. I appreciate it. I hope this community is helpful. I put everything I have into it and I do my best every day. Some days are hard and YouTube has been very difficult for me. I don't know what it is. Some of the comments I get, I know I shouldn't. And I always say, I'm not going to talk about it, but it's like, it's important to understand where I'm coming from sometimes. Like, I want to get to the point where I'm making at least two videos next year. But in order to get there, I'm still, my battery, when I think of YouTube content, is not recharged. It's not even like 50% recharge at this point. So if you're in the private community, you're in the right place, because I'm still giving my 110% in the private community like I always have. But YouTube is definitely on the back burner, kind of. I'm doing one video a week to kind of just keep the algo alive. And I'm still trying to make good content. I'm not just half-assing the content. I'm just not excited to go make 5 YouTube videos. And even like right now, I probably should make a YouTube video for today. And it's like, I really don't want to. I would much rather make 5 private videos, because I can just be myself. I can hit record. You guys don't care about the bells and whistles. There's not a bunch of toxicity and negativity. I can make content like this that's meaningful, that connects to you, and you appreciate, because you're an investing alien. The problem is that 99% of my audience, or 90% plus on YouTube, isn't you, isn't the actual audience. That audience is the audience that we talk about, that want to ride these hype trains, these FOMO moves, and basically are convinced that they can get rich quick. Some of you listening, unfortunately, will probably fall to the dark side. You will see a lot of this crazy activity where people, I YOLO called this and made 10x, and I did this, and I bought this meme coin or this meme stock, and it's going to seduce you. Unfortunately, it's going to happen to somebody watching. Hopefully not. Hopefully I'm wrong. But that will seduce people to go to the dark side and say, long-term investing is boring. It's not for me. Yeah, I know 99% of people fail, but you know what? I'm that 1%er. I'm really good at everything I do. So I'm just going to YOLO too. And fortunately, you're going to lose money, and then you're going to come back. And it happened in 2020. It's since we started the community, it's been a cycle constantly with this kind of stuff happening. You know, the story doesn't change. The playbook doesn't change. It's just the same thing over and over, rinse and repeat. Buy high, sell low, get retail excited, get them all to pile in, eventually pull the rug. Yes, things are probably going to go a lot higher, and that's good. The problem is when you buy into that, where it's just like, well, valuation doesn't matter. 25 price to sales for Rocket Lab, that's not that bad. I mean, this other stock is 50, price 25 price to sales. I mean, easily it can, at 50% growth, it's going to be, you can convince yourself of that, and it could be true. The problem is you convince yourself with anything, and everything looks sexy and attractive. I even see people saying like, hey, what's the next one? I mean, how many do you want? You get like 50 bagger stocks over the last 2 years. Oh, well, I wasn't here 2 years ago. Okay, we're in a bull market where stuff's just flying. It's really hard for me to go make a YouTube video say, hey, go buy Rocket Lab. It's going to the moon. Why would I do that? I told you to buy when it was $4, not when it's $20. That's a 500% return in less than a year. This is a video we were doing this year saying, and I remember at the beginning of the year, we did Rocket Lab and said, this space stock could take off, kind of a thing on YouTube. And of course it went down, went from 5 to 350. Oh yeah, nice pick, loser, Okay. Well, now look at it. But too bad you bought it at 5, you sold it at 350, and now you regret it because it's $20. It's how do I educate more people? I don't know how to do it. I try. And I think what's hard with YouTube is like this last video I did, it doesn't even get 10,000 views on 75,000 subs. And that kind of content's the stuff that really helps people. People say, I love videos like this. You should do more. Yeah. The algo. So I look at the algo, I open up the app, and it's like a dark cloud comes over me. Views, big gray arrow down. Watch time, gray arrow down. Subscribers down. Negative retention, estimated revenue down. All these numbers, these big arrows, like, you suck. When you're doing good, all those numbers are green, and they have big green arrows, and there's smiley face emojis in the app and shit. And you get stars, and it's like gamified. When a video doesn't do well, it's kind of like, you suck. It's like, well, a lot of people like that video. The problem, it doesn't appeal to most of the audience. So if I look at the stats on it, It says, um, this video has shown less interest from regular viewers. And it also says that regular viewers have watched it for less time. Now, that doesn't make any sense because the video is 47 minutes and 50 seconds long. And so the average watch time on that video is 10 minutes and 36 seconds. Now, 10 minutes is actually a pretty good watch time for a video, but it's a 47-minute video. So you're talking about really bad retention. And so the algo says, oh, well, this guy makes content that nobody likes. So now we're not going to promote it to other people. So that video got 25 subscribers. Our average video, 200-300, sometimes 500 or 1,000 subscribers. But it's not flashy. It's not going to be, Rocket Lab to the moon. I'm going to, tell you to buy it at 20 because it's going to 40. Palantir, it's going to go to $10 trillion market cap. Okay. I mean, we made money on Palantir too, but we didn't do it in the way where we're just like pump, pump, pump. And the thing is that the people that pretend to know that, this stock was going to work out exactly like this, like we didn't know Rocket Lab was going to 5X this year. We just said, hey, this is a company that could be a 10X or zero. Derek's been talking about it for a long time. These are exciting companies. Look at other space names. They've gotten absolutely wrecked, So we've talked about like Planet Labs, PL, another spec stock. It's up 14% today. But if I look at this over the past 5 years, it's down, 69%. It's not what you buy. It's all, also when you buy. Here's Planet Labs down, 69% in the past 5 years, but depends on when you bought it. If you bought it, 2022, you're actually down. So, and this is where people get frustrated. So people are like, well, I was buying stocks in a bear market, but I'm down. Well, yeah, because you're buying Planet Labs at $6 a share, and now it's $3 and you're down 50%. Now, the same dude might have bought it at 178 just in September of 2024 and made 100% return. What you buy matters, but when you buy is really freaking important, right? Black Sky's another one, right? So Black Sky, up 5%. Space stocks are all kind of rallying with Rocket Lab. That's great. Kumbaya, my lord. 5 years, 90%. So if you bought this thing at $78 in 2019, well, it's down 90%. If you bought it at $111, according to this, I don't know if that's accurate, but if it were 120 February 2021, anything's possible. You lost a lot of freaking money, put it that way. So I said in the crypto channel, and I'm glad you took it the right way, Blue. I said 2021 again. Let me just show you this. So I said 2021 again, this Doge thing. And Blue says Elon's divulging of 1.5 billion in Bitcoin holdings plus his endorsement of Dogecoin is what spurred on 2021 run, 2025 setting up to be a whopper. So, here's even Blue will tell you, like, he's bullish on crypto. He's not going to tell you to buy any meme coin and just hold it forever, but it's like, hey, you might be able to buy some of these and make money. Just be careful of going to the dark side and just convincing yourself that the stock market's a casino and you're going to use it to get rich quick, because memories are very short. But we just went through this only a few years ago and it didn't work out very well for about 99% of people that tried. And these are some great examples on your screen of names that, $81 stock and now it's $7. Now, to be fair, Fired Up Wealth and Derek never told anybody to buy these stocks at these prices. They've always been very speculative. We've had certain market caps that we're willing to pay for names like this. I don't own this stock. I do have like $18 worth of Planet Labs or something very small. It's a little bit more than that, but very, very small. I hope this thing kind of rips up and I'll sell it and basically break even on it. But for me, Rocket Lab was always the one that was interesting. And I would say, hey, like if this gets to a certain market cap, I'm going to, buy a little bit of this. And, under $5 billion market cap, I think is what we talked about. And, now it's 10. And of course, you could have bought it at 347 and then 2144 is a big range. Don't think for a second that this is just fundamentals, because it's not. There's a combination of, yes, the earnings were good and the fundamentals are improving. But if it's a 25x price of sales, like, understand why the stock is up 41%. This is a combination of short sellers plus retail piling in and everybody just piling in to a name. It's about a lot more buyers than sellers. It's simple as that. And with that much short interest, it certainly could squeeze higher. But don't think that if you go buy this at $20, that it has to go to $100 in 2 years because the growth rate is that exciting. I mean, it could, but it's going to take a lot of fundamental improvement to support this valuation. And so this is fundamentally overvalued at $20 a share, which is why I would consider trimming some, even though it could go to 25, 30, or if you hold it to 2035, which has been the target area for us, it could be literally $100 billion market cap. It could be a 10x from here. That won't be a straight up line from $20.85. I can tell you that with confidence. I remember getting pissed when Rocket Lab sold. So here's an example. This person's saying, pissed when Rocket Lab dropped. Thankfully, I didn't sell. I had 18,000 shares, 461, trimmed some over 20. I mean, honestly, if I were managing your money, which I'm not, that comment tells me you should sell all of it, because I'm not judging or anything, but based just on that, that's telling me I bought the stock because I thought I was going to go higher. And that's the crazy part. If you think about investing, the only reason we buy stocks fundamentally from the simplistic form is that we're trying to make money. But it should not be the only reason that we buy stocks. Like, you don't want to be in love with a stock, like married to it, where it's like completely oblivious to any of the facts. Like, oh, well, Tesla's the best company in the world, even if, A, B, and C are happening, whatever, right? But you want to be like, hey, I want to own part of this business. And yeah, the stock is down, but it's a spec stock. I know it can go to zero, but I believe that this leadership team and this company is going to be successful over a very long period. So for this stock, it's 2035 is what, Derek and I have said to you guys. It's 2024. That's so our time horizon is 11 years from now. So if you did buy it at 5 and it went to 350, like, you should have had that expectation when it happened. And if you didn't, maybe you weren't in the community. I'm not picking on you or anybody specifically, but when I see something like that, if a friend of mine at a bar said that exact statement, thankfully I didn't sell. I had 18,000 shares, and I was mad when it went down. I'd be like, dude, it's 21 bucks. Sell it. Take your money. You obviously don't want to be part of the business for any reason other than making money. So you made money, take your money and run. I would sell most of my shares or all of them. That's what I'd tell my friend at the bar. You do what's best for your money. I appreciate your time and attention, guys. Hope you guys have a great rest of your day. This whole time I wasn't on the main camera at the end. You get the gist. You're probably just listening anyway. But I do appreciate it. I'm really excited about 2025 and the community and some of the things that we're working on right now. Appreciate your patience with me too, as of course, I go through the recharge cycle towards the end of the year. If you've been with me for a while, you know that this time of year, I always kind of go through a burnout recharge phase. I still think I'm bringing it. I hope I am. Tell me if I'm not. Like, I feel like I brought the heat today. And so I'm going to keep doing that. I'm going to keep doing what I'm doing in the private community, but I'm really trying to recharge my public facing batteries, like the YouTube batteries. So bear with me as I get through that. I will get through it, and we will have another exciting YouTube run, but I just right now need to recharge my battery on that front. So have a great rest of your day, guys. Thanks for watching. See ya.